Namaskar and a very good afternoon. Welcome to this weekly currency take. Last week was quite interesting for the Indian rupee because Indian rupee mein there was a broad-based sell-off. Indian rupee is one of the weakest currencies over the past couple of weeks in the world. And next week is going to be truncated one. But at the same time, because global markets are on, it's going to be quite volatile. Let us look at the weekly performance. USD INR 0.5% up, but every other currency against the Indian rupee has clocked almost 1.5 to 2% growth. So it shows that how weak the Indian rupee has been. This again shows the performance of the Indian rupee against the top 26 currencies in the world. And Joe clearly is coming out is that the month of August has been a weak month for the rupee because most of the currencies have done better than the Indian rupee. And that is something which is concerning. Because over the past 2 weeks, especially over the past 1 week after the US inflation data, which came lower than expected, dollar index has come off, equity markets has rallied, and oil prices are holding below $100. So, ये situation में अगर Indian rupee is underperforming and USD/INR is trying to move towards the all-time highs of 80.05 on the spot, that is concerning because and at the same time, FPI flows has been positive, which we will see in the upcoming slides. $2.6 billion has been the net inflow in the month of August. In spite of all these positivity, intermarket positive, flows are positive, dollar rupee is simply refusing to come down. This is pretty concerning because when global markets turn hostile, the question is what happens to the Indian rupee? Because if Indian rupee is underperforming when the things are good, what happens to the rupee when the things become hostile? So this is something we have to watch. The perplexing thing is from where are these bids coming? Is it large scale buying by the importers? But generally, importer buying is always there, so they are not really something which is market moving. Then is it the RBI who is actually buying dollars to build its reserves? We don't know. But one thing is clear: Indian rupee is showing underperformance, and that something is concerning, and we would keep us close watch on. Now, if as we said, the FPI activity is net positive, but it's not having much impact on the Indian rupee. Option activity, we focus on out of money options. We look at out of money calls and out of money puts, how the option writers are building the open interest, and that is clearly indicating that the option writers are betting on a range between 79 and 80. In case the 80 or 79 is squeezed, which means the dollar rupee starts to drift above 80 or drift below 79, that can be bad news because it can trigger a short covering which can accentuate that move. So keep in mind 79 and 80 are major resistance and support levels. If this breaks, then we can have a short squeeze from the in the option sellers. The price action on the charts are clearly indicating that a very narrow range is unfolding. 79.80 on spot is a major area of resistance. If that breaks, 80.05 becomes the next port of call, which was the last all-time high. And if that breaks, then then all bets are off. We could see a very sharp up move. Of course, RBI is going to be there in the market, intervening all along the way, intervening quite aggressively, because the two major objectives of the RBI is Indian rupee should not become too volatile and Indian rupee should not become an outlier, which means a major underperformer, which has been the case in the month of August. So 79.30 on the down, 79.80 on the up, and max 80.05 on the up. So this is the broad range which the Indian rupee is. As long as the Indian rupee or the USD/INR continues to oscillate within this range, the trades are you try and sell at the extreme end or closer to 80 because your stop loss is small, and you buy near 79, 20, 30 because your stop loss is small. Or you can sell straddles and strangles. But keep in mind your stop losses have to be there in these trades because if there is a range breakout, you don't want to be caught on the wrong foot. Coming to euro, eurozone से कुछ खास economic data था नहीं, investor confidence था which came in better but hardly had much of an impact. It was the US data which is driving the euro higher. The fall in the US inflation is a big positive. At the same time, जो बाकी data था from US were mixed bag. But one more concerning thing is that if you look at the European gas market, there the gas prices are inching towards an all-time high, which is dangerous news and bad news for the European economies, including Eurozone and UK. Price action in Euro INR is indicating a range between 80 and 84. Coming to GBP, apart from the UK economic data, which has not been too market moving because the Bank of England has been constantly warning that a recession is coming. What has been market moving for the pound has been the broader uh, risk sentiments, which is what's happening to the in the equity market, and also what's happening to the interest rate differentials between US dollar and pound. And the interest rate differential and the equity market both are supporting, in fact, the current bottom in the prices. So a near-term bottom which the GBP has formed is being supported or corroborated by both the risk sentiments as well as the interest rate differentials. So we need to keep an eye on these two factors because GBP का खुद का strength अभी नहीं है. So if these two factors turn against the pound, then we could see a sell-off. Price action is indicating a range and a major resistance around 98, 98.20 on the spot. In case that breaks, we could see a move towards even 99 levels on the spot. Yen, highly sensitive to the interest rate differential and risk sentiments. Interest rate differential is clearly indicating that dollar yen can see some recovery, which can be negative news for JPY INR, provided the dollar rupee stays flat. Price action is indicating a resistance around 61.5. If that breaks, we could see a move higher, but 61.5 is going to be a strong resistance in the yen INR. The major economic data, we have the Chinese economic data on Monday when we are closed, and on 16th also we are closed. We have the UK, the German, and the US data, which is going to be market moving. 17th, when we open, we have the UK CPI, the Eurozone flash GDP, and the US FOMC minutes. So it's going to be quite eventful week because there are a lot of heavy duty economic data coming out. So volatility can increase in all the currency pairs, in USD INR, Euro INR, GBP INR, and JPY INR. So brace yourself. Next week is going to be highly volatile. The view as of now is that we may see volatility, but we could see the market move in a range. And these are the price levels which we are looking at in the August 26 futures. So with this, we conclude. Thank you for listening to our podcast. We would love to see you here next week, same time.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.